All right, let's dive in. Today we're dissecting Dabur India Limited's latest investor communications and financial reports.
Fresh from October 30th, 2024.
Yep, their Q2 performance for fiscal year 2025. Plus, we've got a press release about their acquisition of CISA Care Private Limited. Dabur is making some bold moves.
Especially considering the current business environment.
Right. Their reports highlight things like moderation in urban demand and high food inflation.
Not to mention heavy floods.
It's not just abstract economic terms, though, right? These factors have real consequences for Dabur and for consumers.
Absolutely. Think about it. When food prices go up due to inflation, everyone gets more careful about spending.
Makes sense.
And in areas hit by those floods, well, priorities shift entirely. This puts the squeeze on companies like Dabur.
So how does all this translate to their actual Q2 performance?
Well, their consolidated revenue is INR 3,029 crore.
That's a 5.5% dip year-on-year.
Right. And their India FMCG revenue is down to 7.6% year-on-year.
Okay, so not exactly stellar performance.
There's more to the story, though. That revenue drop is partly because they chose to rationalize inventory in their general trade channel.
Rationalize inventory. Break that down for us non-business folks.
Sure. General trade basically means everyday shops, smaller retailers. Dabur slowed down how much product they were sending to these partners.
Why would they do that?
It might seem counterintuitive, but it helps those partners manage their own inventory better, leads to better returns for them in the long run.
So short-term hit for a stronger partnership.
Exactly. Shows commitment to their distribution network, especially important in a volatile market.
That's interesting. So it's not all bad news then?
Not at all. Their international business is actually doing quite well.
Oh, really? How well?
It generated INR 847 crore, 13% year-on-year growth in constant currency terms.
A real mixed bag then. Some areas struggling, others thriving. Let's break it down further, starting with their home and personal care division.
Good place to start. That's a real highlight. They're gaining market share across the board.
Especially in oral care, right?
You got it. They've even engaged with over 100,000 dentists to promote their products.
Smart move. Instead of just traditional advertising, they're tapping into the trust people have in their dentists.
Exactly. Building credibility and brand loyalty, especially when people are being more careful about what they buy.
It reminds me of their healthcare segment, where Chyawanprash continues to be a top performer.
It does.
And honey too, actually, gaining market share, which is interesting given the economic situation.
Raises a question, doesn't it? Are people prioritizing health and wellness even when tightening their belts elsewhere?
Like choosing to skip the daily coffee but not your vitamins.
Precisely. Dabur needs to understand those shifting needs and how they're impacted by everything that's going on.
Now, what about their foods and beverages segment? Seems to have taken a bit of a hit.
Yeah, they specifically mentioned the monsoon season impacting sales.
The heavy monsoons and all that flooding, can't ignore that.
Right. But even within that, they called out their homemade portfolio and batch masalas doing well.
So maybe people are cooking more at home because of food costs.
Could be. And if so, Dabur seems well positioned to capitalize on that shift.
Now let's talk about their recent acquisition, CISA Care Private Limited. This caught my eye. They're spending INR 12.59 crore for a majority stake.
And with CISA's total value estimated between INR 325 crore, including debt, it's a big investment, especially given Dabur's own mixed performance.
What's the strategy behind this?
Well, CISA is a leading player in the Ayurvedic hair care market, and that's a segment Dabur wants to expand into.
Ah, I see. So even with economic headwinds, they're making a move to strengthen their position in a high-growth market.
Exactly. It instantly gives them a foothold in Ayurvedic hair care and lets them use their existing network to boost CISA's reach. A classic example of using acquisitions for growth, even when facing challenges elsewhere.
Raises the stakes, though, doesn't it? This isn't just about weathering a storm. It's about using the momentum to push forward. How do you see this impacting the Ayurvedic hair care market?
It's bound to shake things up. You've got Dabur, already a giant in hair care, combining forces with a dominant Ayurvedic brand.
Potentially creating a mega brand with the best of both worlds.
And with their combined resources and expertise, they could really disrupt the landscape. It'll be interesting to see how this plays out.
Dabur's Q2 and this CISA acquisition paint a picture of a company that's not afraid to make bold moves.
They are rationalizing inventory to build stronger relationships with their partners while also investing heavily in a new market.
It's about balancing short-term adjustments with long-term vision.
You've got it. They're not just reacting to the economic climate, they're actively shaping their future. And that's where that quick commerce dynamic comes into play. Remember that interesting tidbit from their report?
Right. Quick commerce is growing at a rapid pace. Almost a side note, but maybe a significant clue to their future plans.
It's certainly worth exploring further. Quick commerce, with its focus on speed and convenience, is changing consumer expectations.
And Dabur is acknowledging that trend. Knowing them, they're probably already brainstorming ways to leverage it.
It could be a game changer, especially in urban areas. Imagine integrating quick commerce into their distribution network for things like their homemade range or essential healthcare products.
And don't forget their international business, which is already doing well. Quick commerce could help them reach even more customers in those emerging markets.
It's exciting to think about the possibilities. It shows Dabur is operating on multiple levels, navigating challenges while also seeking out opportunities for growth and innovation.
This deep dive into their communications and reports has given us a real inside look at their current state and their ambitions.
They're not content with simply riding out the current wave. They're paddling hard and charting their own course.
The question is, can they pull it off?
That's the million-dollar question. Only time will tell. But one thing is for sure, it's going to be a fascinating journey to follow. Dabur is a textbook example of resilience, adaptability, and strategic thinking in action. And with this CESA acquisition, they've just upped the ante, adding another layer of intrigue to their story.
It's a real-life business drama unfolding right before our eyes. Now, let's take a closer look at this CESA acquisition and unpack its potential impact on Dabur's future.
I'm all for it. Let's dissect this strategic move and see what we can uncover. This CESA acquisition, it has the potential to reshape the entire Ayurvedic hair care market. Dabur, a household name with massive distribution, tons of marketing power,
Right.
joining forces with CESA, a leading Ayurvedic brand.
Creating a real powerhouse could be a market disruption in the making.
It very well could be. Dabur brings their expertise in navigating the consumer goods world. CESA has that deep understanding of Ayurvedic formulations, a strong brand in that specific niche. Together, they could really redefine the Ayurvedic hair care experience for consumers.
So how will this play out? Will they keep CESA as a separate brand or fold it into existing products?
That's the million-dollar question, a key strategic decision to watch. They could keep CESA distinct, cater to its existing customer base, but use Dabur's network to reach more people. Almost like a specialized team within a larger organization.
I like that analogy. But they could also take CESA's Ayurvedic expertise and infuse it into Dabur's current hair care products,
Right.
revamp formulas, or even launch new lines.
That would be smart. Tap into the growing demand for natural and holistic hair care. It's a classic dilemma when companies grow through acquisition. Keep the acquired brand separate or absorb its strengths. But amidst all this, remember, Dabur is facing challenges in some of their other segments.
Right, especially foods and beverages.
This CESA acquisition, though, shows commitment to growth, to innovation, even when other areas need attention.
It speaks to their long-term vision and their willingness to take risks, not just reacting to a tough economic climate. They're shaping their future. And that's where that quick commerce thing you mentioned earlier becomes even more interesting.
Right.
Quick commerce is growing at a rapid pace. Almost a throwaway line in their report, but maybe a hint at how Dabur is thinking about the future.
It's worth exploring. The rise of quick commerce, instant delivery, all that convenience, it's changing consumer expectations. For Dabur to even mention it suggests they're at least aware of its potential and knowing their track record.
They probably already have ideas about how to use it to their advantage. Think about it, especially for their homemade range or essential healthcare products.
It could be a game changer, especially in urban areas. Don't forget their international business, too. Already doing well, but quick commerce could help them reach even more customers in those emerging markets.
So Dabur is dealing with financial pressure, making a big acquisition, and potentially eyeing this quick commerce wave. Like juggling multiple priorities while staying ahead of the curve. Can they pull it all off?
That's the question, isn't it? Only time will tell. But what we see is a company demonstrating resilience, adaptability, strategic thinking. A case study in how to navigate a complex business landscape.
We've gone beyond the surface level here. Investor communications, financial reports, the CESA press release. We've gotten a real glimpse into how this company operates.
We've gone beyond just the facts and figures. We've explored the why behind their decisions, looked at the risks, the opportunities ahead. That CESA acquisition in particular, fascinating move that could have ripple effects throughout the entire market.
Like a real-life business drama unfolding, and we get to analyze each plot twist. Now, before we wrap up, Any final thoughts on what all this means for Dabur's future?
Well, the CISA acquisition has the potential to be a game changer, solidifying their position as a leader in this high-growth segment. But integration is key. They need to make sure they don't stumble over their own ambition, carefully considering things like brand positioning, products integration, their overall marketing approach.
High stakes.
Absolutely. Beyond that, they still need to figure out those struggling segments, foods and beverages in particular. Adapting to those evolving markets and consumer behaviors is going to be crucial there. Tweaking product lines, marketing campaigns, distribution strategies, staying agile.
A constant process of evaluation and fine-tuning.
Exactly. And that brings us to the ultimate question. Can Dabur leverage their strengths, overcome their challenges, and come out of this economic uncertainty even stronger?
The million-dollar question.
Right.
A question we'll be keeping an eye on as their story continues to unfold.
It really is a testament to their thinking, their strategy, making bold moves like the CESA's deal despite everything that's going on.
With that, let's turn to you, our listener. Do you see these moves as a sign of strength or a risky gamble? What other acquisitions or strategic shifts might they make in the future?
Questions worth thinking about. Dabur isn't just playing the game, they're shaping it.
And on that note, we wrap up part 2 of our deep dive into Dabur. Don't go anywhere, though. We'll be back shortly to tie it all together and leave you with some final food for thought. Dabur's really trying to make their mark, aren't they? Not just reacting to the market, but actively shaping it.
It's impressive.
So as we wrap up our deep dive into Dabur, what's the one key takeaway you'd want our listener to remember?
I think the big thing is this. Even when things are uncertain, economically speaking, companies can still find ways to grow, to innovate.
And Dabur is a great example of that.
Absolutely. They show us that it's about understanding the market, adapting to what consumers need, and having a clear vision for the future, and not being afraid to take some risks.
Great insight. So to our listener out there, keep an eye on Dabur. They're not just trying to stay afloat, they're charting their own course. It'll be interesting to see where they go next.
Definitely. The business world is constantly changing, and Dabur is right there leading the way, showing us how resilience, how adaptability, how strategic thinking, all those things can lead to success, even in tough times.
Well said. Thanks for joining us on this deep dive. Until next time, stay curious and keep exploring the ever-changing world of business.